you so much, everyone. I hope you can hear and see me, and good morning from New York. I think it's going to be relevant for what I'll be mentioning today, that I'm dialing in from New York because we are following some negotiations on tax at the United Nations at the moment. Yeah, but first of all, a warm congratulations to Financial Justice Ireland. Eurodad is a network, and what we are is the result of the collective efforts of our members and our campaigns and the work we do together. So it's really great to see that Financial Justice Ireland is still going strong. And thank you also for taking up the issue of tax. Which I think is an important one in Ireland. And as Nessa will get to, there are certain elements in Ireland that we all are highly aware of. But the way we come to this as a collective and as a network, of course, Eurodad and our members are part of what's known as the Global Alliance for Tax Justice. And what we really have is an alliance around the world of organizations that are looking at tax issues and asking questions about why is it that multinational corporations can still pay sometimes less than 1% in tax? And why is it that the wealthy can still move their wealth to other countries? And therefore, as a result of that, it's becoming very difficult to tax large profitable corporations and to tax highly wealthy individuals. And that's part of the overall regressive tendency we're seeing in the tax system, is that many governments argue that it's so difficult to tax anyone who can hide their money internationally or move their money around. And as a result, we have the governments taxing, if you like, the people that can't run. And that brings in taxation of consumers, of workers, of small and medium enterprises that don't have international structures. And that's how the international loopholes then end up generating a global trend towards a more regressive tax system, and also a tax system that's failing to reduce inequalities both between countries and within countries. And of course, we've taken up this issue. It's been a great joy to be part of this work for 10 years at Eurodad. And really looking at why is it that multinational corporations can still continue to avoid taxes in large scale. And there, the transfer pricing system really comes out as a historic, very, very wrong policy decision. It's highly technical, and that's a part of the challenge on tax. We have an issue that's become much more complicated than it needs to be. But the basic idea is to say that Coca-Cola in one country, from a tax perspective, is assumed to have nothing to do with Coca-Cola in another country. It's basically assumed that these are all little independent Coca-Cola companies instead of one big corporation. And that's what allows the multinational corporations to move profits from one country to another and do what they call tax planning. And then, of course, we have some countries that are offering generous tax packages to try and attract profits to their country. And what we've seen over the last decade is a huge increase in attention around this problem. There's really been a momentum building, which has been amazing. And we've also seen that the rules be changed, and there's a recognition that it's not working. But we still have a very long way to go. Of course, you might have heard of the minimum effective corporate tax rate of 15%. Which we are quite critical of. And the first point of criticism is that it's not a minimum. You can still, within the new system, pay an extremely low level of tax if you are a multinational corporation. And you can actually still, if you structure yourself the right way, we even risk seeing corporations paying 0% So I guess we should be calling it the minimum 0% corporate tax rate, which is basically in some ways where we started. Now, in all likelihood, there will be more tax payments by corporations as a result of this minimum. It's not going to be 15%, but they will be paying more. But the second problem is that we're seeing countries like Switzerland look at ways to collect the tax and then send it back through subsidies or other ways of trying to accommodate the interest of corporations. So they're basically looking at trying to make it a zero-sum game. And again, that sort of brings us back to the starting point. And lastly, the minimum effective corporate tax rate, it should also be said that it only applies to the 15% biggest multinational corporations, which means that we have 85% of the corporations for whom the rules are the way they have always been, with all the flaws that come with it. But this is not to say that we've come nowhere over the last 10 years. And I think especially when it comes to the push for global change, I think we're only seeing the beginning. And that brings me to what I'm doing here in New York. There is now a huge push started from the African countries. They are calling for a UN Convention on Tax. Just like we have a UN Climate Convention, they're suggesting to have a UN convention. And this would really fill a huge gap at the international level, because we have global tax rules, but we've never had a forum where all countries participate as equal. And that might seem odd, but the tax rules that we have actually been negotiated in different types of fora, where we haven't had all countries at the table. And it's also been patchwork. I mean, for example, this minimum effective corporate tax rate, what we've seen is international rules that try to fix the problems with different types of anti-avoidance measures on top, and different types of what we often call sticky plaster solutions. And the prospect of having a UN tax convention is then also the idea of how about having a fundamental reform of the whole tax system and the principles that it's based on. And one of the principles that we are championing here is the principle that one country shouldn't be allowed to destroy the tax base of another country. If you have tax rules that allow wealthy individuals or corporations to avoid or evade tax in other countries, that's not okay. And so we need to go from this system of survival of the fittest, where governments are undermining each other, towards having a cooperation at the international level that allows the national tax systems to function. And of course, in this work, we've tabled as civil society a full proposal for what a UN tax convention should look like, that would include a reform of the corporate tax system to replace the transfer pricing system. It would look at how we can have transparency. It's commonly referred to as public country-by-country reporting, but what it is in essence is the idea that citizens should be allowed to know how much corporations are paying in tax in each country where they operate, and how much business activity they have in that country, so that we can see whether the economic activity and the profits of corporations are aligned. And of course, then you can also see at the global level, is this tax system that we have now, is it fair when it comes to the way that the income is divided between countries, compared to where the corporation has its activity and makes its money? So of course, it's going to be a long journey, and we're only just starting now. But I think the good news is that we're really looking at having a fundamental reform, starting with the way that decisions are made, and then building up the principles and the institutions and the structures. And it's been a long campaign, but until last year, we thought we were not yet at the place where we could have a negotiation where all countries are equal. But in an absolutely historical decision last year, it was decided they're going to start a UN negotiation where all countries are equal. And it was adopted by consensus. Every single country in the UN said yes to this. So now we're here discussing what should be the outcome of this UN tax process, but we're not discussing whether it's going to happen. That is decided. And that was a historical step forward that we saw last year. I think I'll hold it there for now, but I hope that was helpful as an introduction to some of the key battles that we have going on at the moment.
Great, thank you very much, Tove, for that. And it's great you ended up on that positive note about something that has actually happened that, you know, fits in with other discussions we've been having here. So thank you so much. I think what we'll do is we'll go over to Nessa now, and then when Nessa has made her presentation, because you still have time, if you there's other, you know, you have stopped within your time. So if you want to come back after Nessa with some more further points, you know, you'll certainly have time to do that. But we'll move over to Nessa now, and it's great to know that Nessa has actually submitted her PhD thesis. So congratulations and well done. And it's a hard road. And it's great that when it's all still fresh in Nessa's mind, that she's here to talk to us about it today. So you're going to talk about the
Irish dimension. Yeah, great. Could we get the slides up, Thomas? Thanks a million. So that was a great framing from Tove. So it sort of sets the global scene, I suppose. And as all of you will be aware, Ireland is often mentioned as a really problematic state in global tax affairs. And absolutely, Ireland is a really important node in sort of global networks of corporate tax avoidance. So what I'm going to do is talk about some of the key issues in the global debate, but Tove has really covered, you know, the key sort of justice questions that are at the heart of the debate already. Talk about Ireland's corporate tax policy, kind of the headlines. Ireland's all corporate tax legislation, I've learned, is extremely complex. So I'll just give the headlines so that we can kind of get a full overview kind of the Ireland's policy. Then I'll talk a bit about sort of the key difficulty, I think, in understanding Ireland's corporate tax regime is that we have a model of foreign direct investment that is an entangled one of real concrete FDI with a lot of job creation, but also with what's often called artificial FDI, foreign direct investment, which is tax driven or for reasons that aren't about employment or real labour. And then we'll talk a little bit about why tax rules matter, why they're important. And Tove has given a brilliant update on the global tax reforms, but maybe I can pose that can be an opening as to where to next in terms of working on the issue in Ireland. But just so you see that global tax avoidance is very large. It's in the hundreds of billions. It's a nightmare to estimate. As Tove has said, we don't have robust data and up-to-date data on corporate profits and where they're paid, though it's much improved in recent years as a result of campaigning for country-by-country reporting. But whatever the amount, we can safely say that it is a large amount, that it's in the hundreds of billions. Estimates of who loses in terms of actual amounts of money, the Europe and the United States lose a lot of finance, which would arguably, without the avoidance, be paid in European and states and the United States. Though there is an issue about the US tax system that we can come back to and discuss in a minute on whether the US was really losing in this. But also the intensities of the losses of global tax avoidance are very high for global South states. And this is because there's a higher dependency on corporate tax revenues in global South states. There's less flexibility and capacity to expand their income taxes in other areas, so corporate tax matters a lot in those countries. So Tove has touched on the justice questions. You know, it's a question of global equality and individual equalities that corporate tax avoidance is related to. And this is because when corporations avoid tax or reduce the amount of taxes that they're paying, it means that the shareholders, who are the owners of those corporations, get higher levels of dividends into their pockets. And here's some of the kind of institutions and individuals who own, who are the owners of this kind of investment and benefit from corporate tax avoidance. So essentially what it means is that you have already comparatively wealthy people who are in a position to buy shares in companies, to have a good pension, to make investments, and they are getting bigger dividend payments as a result of corporate tax avoidance. And this simply reinforces existing inequalities, whether it's from a class, race or gender perspective. And of course, I've talked about the interstate inequalities that are created by corporate tax avoidance as well. So Tove has done a really accessible explanation, I think, of how corporate tax avoidance occurs and the basic problem of treating, you know, the Coca-Cola corporate group, for example, as many different independent Coca-Colas all around the world, when in reality we know there's just one Coca-Cola group and Coca-Cola plans centrally around their business decisions and tax decisions. So some of the things that are very obvious and known to us is that corporate tax rates have fallen over time. So this is the tax that is put as a percentage rate on the profits of corporations. And you can see back here in the 1980s, a lot of the countries around the world were charging between 40 and 50% on corporate profits as their tax rates, and you can see more recently that has been slashed in half in the sort of mid-20s for a lot of, for example, European countries. And of course Ireland is an example of a country that has always had an extremely comparatively low corporate tax rate. But the rates are in a sense just the most visible aspect, and often the effective rates, which means that the actual amount paid are much lower. Was just giving you some examples of the complex ways that corporations avoid taxation, and it is to do with the fact that there are many different that corporations are centrally managed but operate as legally independent entities in each jurisdiction where they operate. So it means that the legal rules of different jurisdictions, of different countries, can be played off one another. So the treatment of debt in one country may be different in another country. Funds or income streams can be declared in different ways in different jurisdictions. Or just a lot of profit, which is what fundamentally happens in Ireland, can be booked in a country with a low tax rate and other offerings in order to minimise the global tax payment of a company. Okay, so I'm just going to talk you through some of the kind of headline policies that are important to be aware of in Ireland's corporate tax regime. And the first thing, I suppose, is that the regime is viewed as sort of being shaped from the late 1950s onwards, when Ireland kind of began to look outward as a more externally focused economy. And I think throughout the period of Ireland's corporate tax regime, really the goal was job creation. It was to create jobs based on foreign investment, and that was the goal of successive Irish governments, even up to now. So in the late 50s, there was a 100% tax relief given to manufacturing, especially around the area of the west of Ireland, called the Shannon Zone. So we had the initiation of a lot of foreign companies investing in Ireland and doing minor adjustments to their goods which qualified as manufacturing, because manufacturing also wasn't defined in Irish legislation. So it meant that a lot of low-level work could be carried out in Ireland, and then those goods exported onwards into the European Union, or this was pre the European Union at this stage. Once we joined the European community, there was concerns that this was a form of state aid, that it was differential treatment for different kinds of companies. So Ireland came under pressure to adjust this, or there was a sense that this wouldn't be sustainable. So a 10% rate on manufactured goods was then introduced, which was still a very low rate. And finally, in the 90s, the European community indicated that there was challenges brought by other states against this 10% rate. And Ireland, to the surprise of the European community, introduced the infamous 12.5% corporate tax rate for all companies, not just for foreign companies or for manufactured goods, but across the board. So while it was a very low rate, it couldn't be argued that it was favouring any particular sector. So it passed the state aid rules of the European community because all companies basically were given a low rate. And then in the later 1990s, there was further introductions and adjustments to the regime. For example, the introduction of what were called Section 110 firms, which could bring assets into Ireland in a tax-neutral way, so without any tax liability. And also, I should say, in 1987, I should have mentioned that earlier. The rate, the 10% rate and then the 12% rate was also applied to financial services, and this was the introduction of what became called the International Financial Services Centre. So then, in a sense, it wasn't really until the 2000s that people started really taking notice of Ireland's regime. So the focus tended to be on the tax rate, that this was a very low tax rate, and that it was kind of an outlier among European states. But Ireland increasingly came under pressure because Irish macroeconomic statistics were showing that there was a really high level of profitability of foreign firms in Ireland, which was, really difficult to explain. So after various types of political interventions that we'll talk about later, the double Irish Dutch sandwich corporate tax avoidance structure became known. The Apple statelessness structure, which was specific to Apple and maybe one or two other companies. And then the current phase, which is a big onshoring of the assets of intellectual property belonging to large foreign corporations. So they were sort of key headline structures that were allowed in Ireland as a result of Ireland's tax rules, but that from political pressure, Ireland phased out from kind of 2014 onwards. So maybe if we just take a step back then and look at this, what did this regime deliver? Like, what happened as a result of the regime? And I would see it as entangled FDI, that there's real foreign investment in Ireland, but also very tax avoidance orientated investment in Ireland too. So the big impacts were, of course, employment. And you can see here, this is just a journalistic summary of the period of the different decades where foreign companies established themselves in Ireland. And it's kind of a who's who of the most globally profitable firms. And in particular, pharmaceutical companies, ICT or technological companies and digital companies, and financial services became extremely concentrated in the Irish jurisdiction. And you can see the early tech firms, for example, like Apple, in comparison with the later tech firms like Google or Facebook or Meta, that you can see Ireland was sort of ahead of many countries in attracting these firms. And a lot of this is because of the work of the Industrial Development Authority, which is a key agency in Ireland, whose job was to market Ireland and to be in the United States and foresee, what companies needed and to entice them to come to Ireland. But you can see from this graph here, the one on the left that says Ireland, this compares Ireland as second highest in terms of the amount of foreign direct investment that Ireland is receiving in comparison with other, these are all European economies. And you can see, like, Ireland is a much smaller state than many of these states, but is scoring really, really high. The other key thing to be aware of is the bar chart on the other side of the slide, which is that the majority of this investment comes from a very small number of companies. Just 25 corporations make up about 70% of foreign direct investment into Ireland. So this shows Ireland as highly dependent and central in the global planning of a small number of extremely profitable global firms. The other thing to know is that it's virtually all US investment, that Ireland's foreign direct investment is investment coming from the United States. So even if you see the kind of multicolored bar chart on the side there, it shows where investment comes from, where is it before it comes into Ireland. So it can be in offshore centres in the Netherlands and Luxembourg and all these places. But when you look at who the ultimate owner of that investment is, you can see here the big blue bar there, that the owners are fundamentally US corporations. So this really makes us focus on, what is the interaction between Ireland and the United States, between the tax rules of Ireland and the United States, and why is Ireland so attractive? Okay, so you can see then the other impact here. If you look, this just goes up to 2018. That you can see the percentage of employment that was created by this investment into Ireland is nearly 17% of total national employment. So this is why foreign direct investment is so central and incredibly important to Ireland's development model. It's that it has delivered, really significant employment in the Irish state. It also means when you start talking about the entanglement between tax and real FDI, it becomes very politically sensitive very quickly, because of course successive Irish governments want to protect this employment. The other big impact is on the corporate tax revenue side. And this was never really the intention of the Irish state, to collect loads of tax revenue. But you can see here the massive increase from 2014 to 2022 in corporate tax collection. And you can see in 2022, nearly just over 21 billion euros was collected in corporate tax receipts, which is absolutely extraordinary by European Union standards. And you can see on the table here, just if you compare it to other big taxes like income tax or VAT, the ratio increase from 1995 to 2021 in corporate tax, it increased tenfold in comparison to, say, a 5% increase in income tax or a 4% increase in VAT. So you can see there's something really weird happening out of the ordinary with Ireland's corporate tax receipts. So what is the connection then between all these things and corporate tax avoidance? Well, one of the authors, a group of authors that I found useful are two people called Leonard Seabrook and Duncan Wigan. And they have this concept called global wealth chains. And they argue that alongside the kind of value chains of corporations, where we know about corporations making decisions about outsourcing production to Vietnam or China or Ireland for that matter, they also make more hidden decisions, which is around how to increase their profitability. And tax planning is part of that process of building a global wealth chain. So we can see here from this bar chart that Ireland is a really big actor in the global wealth chains of US corporations. You can see here Ireland is second on this bar chart in terms of the level of profitability of foreign firms. So next to Puerto Rico is recorded, this is for I think 2019, as the most profitable for foreign firms, and Ireland is next. So there's really high amount of what we call profit shifting into Ireland, where corporations are putting profit into Ireland, which can't possibly, it's not credible to imagine that there are workers accompanying the creation of this kind of profit. So one of the things that tells us this is the difference between what we call GDP and GNI star. So GDP is the gross domestic product, is a measure of the total economic activity in Ireland, anywhere, and it includes the profits that are generated here, but also that go straight out to companies abroad. So many of you will remember in 2015, Apple brought a lot of its intellectual property into Ireland, which meant that asset was valued within Ireland's GDP. And in the space of a year, Ireland's GDP increased by over 26%. Okay, so you can see how the Irish economy is very subject to the vagaries of the decision making of big corporations. But here, if you just look at the last, the income of redomiciled firms, depreciation of research and development and intellectual property, and depreciation of aircraft leasing, these are judged by our statisticians as the key distortions between GDP and getting to some kind of measure of what is actually happening productively in the Irish economy. So this tells us that firms that are setting up headquarters here, firms that are bringing intellectual property into Ireland, and firms that are carrying out the leasing of aircraft have nothing to do with actual employment and real economic activity in Ireland. So that kind of gives us a heads up on, economic areas that need greater attention. So here is just kind of an illustration of, if you look up at the top right quadrant, you'll see we've had pharmaceutical and technological manufacturing in Ireland since the 60s and 70s, and more service-driven digital tech from the 90s. And I would call this aligned and connected, in that it created employment, and it is in that it's connected to the Irish economy, and the profits are aligned to employment. That there is the generation of profits in Ireland based on that kind of economic work. But if you look down in the lower left-hand quadrant, you'll see some of those things that are pointed out by the statisticians as problematic. Redomiciled firms, so this is firms that are deciding to flip their headquarters into Ireland. The placement of intellectual property, engaging in contract manufacturing, which is something we can talk about a bit later, and putting royalty payments relating to intellectual property through the Irish jurisdiction as well. But I've put arrows between a lot of these things because a lot of the companies who are doing the redomiciling, the placing of IP assets, actually are also operating up in the right quadrant. They're creating employment. They're the Apple workers down in Cork, the workers in Facebook down on the Silicon Docks or whatever, which is what shows us, that there is perhaps a dual strategy going on via Ireland in relation to tax. So what are the tax games then? If we look back on sort of the change over time, we can see we had the sort of tax-free exporting model from the 50s. Then the 80s, we had the very low tax manufacturing for export, mostly of tangible goods. But then from the 80s, things became much more financialised. There was a big concentration of financial services in Ireland. And from the 90s, we see things like the double Irish, the Apple statelessness model. And you can see there, I've just added in the text below of the sort of real work that was going on. In a sense, it was sort of low value manufacturing. Then the stuff from the 1980s, there's tens of thousands of people employed in financial services, but there's trillions of euros going through Ireland's economy in relation to this financialised sector. And then the last bit, which is the bit I kind of studied the most in my research, is these kind of what I call corporate location games, where the double Irish and statelessness became extremely important tax avoidance structures to the tech and the pharma sectors. From the 90s into the 2000s. So here I've just added some extra arrows where you can see, in a sense, the financial services is trundling along. It's very steady, it's uninterrupted and fairly unchallenged. The locational games, the double Irish and all of that, became very politically contested. So the corporate inversions, measures were taken in the US and the UK to stop companies coming into Ireland in that way. The double Irish, Dutch sandwich and Apple statelessness were outlawed. They were phased out very slowly. The double Irish statelessness, the Apple model, was outlawed almost immediately at the time of the announcement. And the onshoring of assets is currently happening. So I would view that as sort of the current tax game. So a lot of this is about tax rules, which is very head-melting for a sociologist studying accounting and tax rules. But this is just to give you an idea of the sorts of rules that are really important in some of these structures. So in particular, the IP, the intellectual property related stuff. So tax treaties between countries, the European Union gives a waiver on payments on royalties. Ireland's tax residency rules were crucial. Fundamental to all this are US tax rules, and arguably the US could wipe out a lot of this if it improved its own governance of its own corporations. Now, politically, that led a lot of Irish politicians to say, this is the problem originating in the United States. But as we can see, it's a multinational problem, and each of the jurisdictions that I'll show you next play a role in facilitating the construction of these avoidance structures. After 2017, the US took big steps in changing some of its tax laws, which ended critically the option of tax deferral, which we can talk about in the discussion if you like, which was really important to corporations to defer paying taxes to the United States. And then you see the Irish regime, the capital allowances on intangible assets is crucial to the current IP onshoring game. So I'm not going to explain to you the full structures because I suspect I'm probably over time, Jean. I probably need to stop, do I?
No, well, I mean,
yeah.
We have a bit of extra time because
okay.
we've only got 2 speakers, so that's why I said to Tova she could have extra time.
Okay, grand. Okay, I'm nearly done. But we can come back and talk through some of this if you like. But the crucial, this is sort of how the double Irish and Apple statelessness worked. And I put them together because they're really the same tax avoidance structure, just using different geographies. Apple used Ireland and nowhere, so head offices that were head offices of Irish subsidiaries of no address, whereas the double Irish uses Irish entities that are registered in Ireland but are tax resident in Bermuda. So the equivalent of nowhere in the Apple statelessness structure is Bermuda in the double Irish, for example. And for both of those examples, all those profits were lodged nowhere in the head office of Irish subsidiaries in the case of Apple, and in Bermuda in the case of the double Irish. And they were allowed to be in Bermuda because of this quirk of Irish tax residency law, which allowed what are called IR/NR companies, Irish registered non-tax resident companies, which created the Ireland-Bermuda dynamic and the Ireland nowhere head offices of no address dynamic. And that was the law that was changed in Ireland in 2014 and the announcement to outlaw statelessness, which ended those structures through Ireland. But you can see once those complex things were ended, that were using lots of different jurisdictions, the switch was to this onshoring game, and you can see it's much simpler. So in a sense, the tax reforms are having a bit of an impact in that they are forcing corporations to do things in a different way. But in a sense, they are achieving very similar outcomes, I suspect, through the onshoring model, even though it's in a different form. So one of the things to follow on from what Tova mentioned is, the problem of treating corporations as if they're single and independent entities. And when I was tracking, for example, the double Irish and Apple statelessness and the onshoring, you can see there's a whole set of different decisions to make the structure. So corporations are looking at the rate, you see the top row. They're looking at using different jurisdictions in different ways. So you can see the different jurisdictions at play. They're looking at the owner, the kind of corporate entity that they'll set up, okay? And they're looking at the flow of income that will actually be taxable in each jurisdiction. So you can see they've an awful lot of opportunities to work with and compare across states, which is why, theoretically at least, the idea of a unitary treatment of corporations as single entities really makes so much sense to me. The other thing I will just add, like here, what we have in the onshoring game is IP is ending up in Ireland. And because IP, intellectual property, is here, corporations are booking more of their profits here because it's linked to a substantive, very substantive part of their activity, which is intellectual property. But that was not developed in Ireland. That was developed in Silicon Valley in California rather than Ireland. So why did corporations choose to bring that property onshore into Ireland? And the reason is this second row. This is a list of kind of the big allowances that Ireland gives. There's other ones, but these are sort of the biggest ones. And you can see the second one there. The first two are related to capital allowances. And what that means is if a company makes an investment, they can get a tax deduction written off against their profits in relation to that investment. So capital allowances on fixed assets is like if you build a factory, if you build, I guess, a data center or whatever. But the second one was introduced in 2009, and that's a capital allowance on intangible asset investments, okay? And you can see the size of it. It's over 45 billion in value. So that shows you that there are companies that are bringing some of their most valuable assets onshore to Ireland, and they are getting a tax deduction in relation to onshoring that intellectual property. Okay, so Tove has talked you through the global reforms. So we've Pillar 1 and Pillar 2 that are on the table. Pillar 1 is about a new way of taxing corporate profits, and Pillar 2 is this 15% minimum tax. Pillar 1, I think, is very unlikely to happen. The United States, there is not political support and unity for it, and it depends on United States support to make it happen. Pillar 2 is happening, but as Tove has said, there's really significant carve-outs. It's set at a low rate anyway, but it will be lower because there'll be deductions based on employment and investment in research and development and other things. And then I suppose just to end on a political note, in looking at when there was big changes to Ireland's corporate tax regime, when there was counter movements to it, what I really noticed in my research is movements against Ireland's model were only resulted in change when they arose from external sources. So the European Commission moved against Ireland's 10% manufacturing rate. Ireland took action in a very politically savvy way by introducing a 12.5% rate. Then there was a move against Ireland by the European Commission in relation to Apple, by the US Senate in its hearings in relation to Apple, which forced Ireland into outlawing, changing its residency rules, which have been in place since, independence from colonisation. So they were also externally sourced. And then Ireland eventually agreed to introducing the 15% minimum tax, which also resulted from pressure from the OECD and the United States. So I don't know if that is a hopeful or a depressing sign, because it shows big power matters. It also came from very, fragmented sources of power. The United States is protecting the current global tax regime, although it has made some adjustments of late. The European Union, in a sense, facilitated part of the double Irish structure through its tax laws, but yet the US Senate and the European Commission have moved against the Irish model. So there's maybe progressive aspects of these political systems that we can consider. So some of the things that I'm thinking about, having looked at this for a while now, is post all of these legal changes, you probably maybe can't read it, but the top 3 countries that are still gaining, where corporations are booking the most profits, are the Netherlands, Ireland and Switzerland. And you can see Luxembourg is high up there. So it would be very interesting to dialogue with the progressive forces in those countries to find out what their plans are in terms of tax justice work. I think there's big national questions for Ireland because corporate tax has become such a huge bonanza. It has taken focus of proper reform of our national tax system. That's one thing. I think it is also because Ireland is so attractive, both from a real and artificial investment point of view. In a sense, Ireland has overly focused on FDI and made it the central plank of Ireland's industrial policy. So it raises the question of, if we were to change our model, what kind of good quality work would replace inevitably some of the job losses that may occur, because I think it's naive to talk about changing the model without considering the labour implications in Ireland. And then also the international. Ireland has not been a fan of the idea of moving tax negotiations to the United Nations. So that's where I think the link with Eurodad is really important as well. So I'll finish there. Sorry for being too long.
Well, thank you very much, Nessa. And you weren't too long, that was your allotted time. And so we're delighted to get it straight from you after you've done your research. And it's really nice the way yours and Tova's presentations have linked into each other. I think now what we'll do is we'll go back to Tova. Hopefully Tova's still there.
Thank you so much. And thank you, Nessa, also for fantastic work. And it really brings me to think of one of the huge strengths of the tax movement, but also a problem we really have to resolve. And that is that tax is hugely political, but it's really also swamped in technical details that differ from country to country. And the creativity that's going into designing these tax incentives is completely amazing, combined with the fact that often you also need to understand the national system and in some cases the language and so forth. So picking apart the different loopholes really requires expertise at the national level. And I think it would be completely unrealistic to expect that you would have one or a few people that would have the capacity to really do an assessment of the global tax system. And that's where I think the tax movement for me and all the colleagues that we get the joy of working with is so important, because we are a coalition of people that aren't all experts on the same. No one has the full picture. But when working together, I think the capacity that we have to really identify the underlying political decisions and the problems that there are buried between so many technicalities is absolutely crucial. It's only to say that the work that you, Nessa, do, but also just having the national partners like Financial Justice Ireland and all the work that goes on is absolutely crucial, because getting the message back from Ireland and saying this is our assessment of what's going on in our country is crucial. And then we put that together with the update from Switzerland and so forth. But then, of course, at the global level, it comes a whole different aspect. And that's what we're seeing playing out at the United Nations, because we have the African governments coming in and saying, it looks like we're losing more money because of these international loopholes than what we receive in aid, for example. It looks like the losses are massive. And there, I think the role that the African group has played over the last years has been quite extraordinary. It's really only on priority issues that you see governments put so much into pushing an agenda forward, as we have seen the African countries do on the issue of tax and illicit flows. And it says something about what magnitude of problem they perceive this as, but it also says something about what our African colleagues have managed to do over the last 10 years There was something called the Mbeki Panel's report about 10 years ago. And since then, there's been a very, very solid push in getting to the bottom of what is this issue from an African perspective. Amazing to see the progress that's been made, but it's then also been part of building this momentum in Africa, which then transformed into a global momentum when the decision was made last year to start the UN negotiations. And I think of course, there's one thing about getting a place where we can ask for fundamental reforms, where we have all countries at the table, which would also give us a more balanced outcome, especially for developing countries. But the other aspect that it brings is that if you take, for example, and look at the UN climate negotiations, and you compare them to the negotiations that have resulted in the global tax rules, there's some extremely important democratic differences, especially when it comes to civil society participation. In the UN, we sit in the back as observers and we follow the negotiations and we comment on the text and we work with governments very directly and openly. All governments, I should say, whereas the one problem with the global tax rules is that when they are negotiated at the OECD, we're not allowed in the room. We're not even allowed to be in the building. We often don't know who is negotiating on behalf of our governments. And most commonly, the negotiating text is secret. So we don't see it before it's adopted. And of course, there's also huge shortcomings when it comes to the participation of parliamentarians, and the media also is much more, you can say, they have to get the updates from the OECD Secretariat before they can do their stories, whereas at the UN, just like the rest of us, they run around and interview people freely. So there is also a democratic transition taking place as the global discussions move to the UN. And it really also means that we have a platform where national organizations can also track and interact with their government in a different way. And I think that's going to be very important for all the national organizations around the world, that they have this international process where in a way their government has an exam in terms of showing that they really are committed to delivering a fair global tax system. So just to say, very, very exciting times. And yeah, fantastic, Nessa. As someone who's followed the tax debate for 10 years, it's so fascinating to see when you pick apart the technicalities and find the politics. And there has been some progress the last years, but we've also often just seen one technical loophole be replaced by another technical loophole, which then they close one door and open a new. And we won't be able to reveal these kind of games if we aren't tracking the developments at the national level. So it's only to say that I really appreciate Nessa's work and this update, and super fantastic to have you guys there. So and it really means a lot to us internationally, not least because Ireland is an important player in the problem globally. So yeah, thank you again, and happy to take any questions.
I think maybe what we'll do now is give Nessa, because we're trying to bring the national and the international together. Nessa, have you any comments, or was there anything you'd like to further to Tovus, and then we'll go to everybody else here?
Yeah, I mean, I think Tove is right in highlighting that there has been really significant change over the last decade. And although we're saying the outcomes are deeply unsatisfactory and disappointing, we are in a place that I think was unimaginable 20 years ago. The idea that there would be a global minimum tax, even, like, the norms have changed. And I must say, I did a lot of research interviews during my PhD studies, and I think there will always be outliers and the games will continue. But there is this acknowledgement, I think, from corporations and from tax planners that economic substance and activity is meant to be aligned with profit or more aligned. Now that is a change in norms, I think. So, a lot, we've done this in Financial Justice Ireland over many decades, is often we're in a battle of ideas to legitimise ideas, and that, really significant changes are indeed possible. And, so I think we're in a really interesting time in relation to tax work. I think there is an entry point there around the role of the United Nations on tax, and Ireland historically has been a strong supporter of the United Nations, but not on taxation. And this is very common, where anything to do with taxation, suddenly there's a different kind of conduct from the Irish government. So I think there is a body of work to be done there. But I also think that we are in Ireland, and it is, I suppose, this is about low tax jurisdictions who have had this model as a development model, that there isn't anything ready to replace it. So this is something I think that is really important, especially in the labour movement, to engage with. So I was just asked to flag from the Nevin Economic Institute that they have just joined Trade Unions for Tax Justice, a European network, and they will be, engaging much more, I think, on the tax issue going forward as well. So I think there's kind of, hopefully a nice coalescence of groups that can work together. The other thing is on the technical side of things, like it's really mind-numbing, the tax rules and accounting rules. And whenever I was listening to kind of seminars of US tax scholars, I always noticed they always had this joke among themselves in the United States that they'd say, when you understand the tax code, please tell me. And they're the tax lawyers, So the complexity of it, as Tova has said, has outpaced even its best interpreters and users. And this is, shows us the sort of hyper financialization and globalization of corporate activity, and how nation states have not kept up with regulating this. So I think this can be very off-putting to campaigners because engaging in argument on tax rules is something that's very labour intensive, because they're also changing all the time. Even in the last 2 weeks, there's new debates about different introduction of new tax rules in Ireland. So that's an ongoing thing. But, in a way, I think there's a decision for activists to decide how far down the rabbit hole you go and then come back out, and developing really good working relationships with, people who are following it, and also sticking to the debate on the principles, the key principles that Tova has outlined as well. Those are just a few things that strike me.
Well, thanks very much, Nessa, because I feel now we've got a really good technical, political, and now also a kind of activist indications. And so over to all of you now. So for comments, questions, and if you have a question for either Tova or Nessa, or they can be just open questions. So
it's just a story, actually, because I work for a US company. He's a subcontractor and has operations in Ireland, working for a tech company. So it's a US subcontractor, it's operating here working, and I work for a tech company under the subcontract. They came to Ireland, I think, 4 years ago. Recently, I think these tech industry is losing some work, I think, and it's firing a lot of people. So this company in the last year is concerned that they might lose the contract with the tech company. And I just noticed, and the question is why it makes sense to think the way I'm thinking of. Because I noticed that they're starting firing people, starting quitting the job, or they start firing people. and they didn't replace these workforce, and they started
Yeah.
hiring people in India, China, and Malaysia, even now I think in Bulgaria as well. So I'm thinking that because there are only 3 or 4 people left in the team, is like trainers and managers, and the whole team was replaced. So I was wondering if they kind of still here just because of they probably just declaring things here, and there's their operations are elsewhere.
Yeah.
And you said something about the implications to jobs if the model changes and there's a replacements, but there is a case as well for job losses just because of crisis of these industries.
Yeah.
And they replacing people in other places.
Yeah.
Do you want to comment?
Yeah. I mean, I think that is the really tough part of being very dependent on foreign direct investment for workers here, is that it's impossible to predict, what the future holds, and there isn't any sort of overview, up-to-date data on job losses in the FDI sector in Ireland, but periodically the Central Bank of Ireland kind of looks at a range of announcements of, job opportunities and job losses in the FDI sector in Ireland. And what we see is that job losses are related to the vagaries of the market for tech and for pharma post-COVID. There's been, a drop in profitability in some cases, but then you see surprising recoveries and return to growth in other cases. So I think that is the character of FDI, where there's always that threat of exit. And I mean, one of the things that, so I'm sorry I can't say anything reassuring about there aren't job guarantees. And also I would say there is a concern in the trade union movement in Ireland that the dominance of US corporate culture in Ireland has had a chilling effect on unionisation of workers as well. And that's maybe stronger in the tech sector than I think the pharma sector are more strongly unionised than tech, though with the exception of Apple workers, I think are unionised through SIP2. So I think that's another factor. The other thing I would add on this is I think Tove may be right that there is a certain cooling effect. I don't think there's an acceleration of the tax games, maybe a kind of stabilisation, it might be the way to describe it. But I think the games will change as well. And what we see in Ireland is like a lot of data centres, for example, being established, which are really important for the tech sector. And because Ireland has been so entangled on the tax issue, I call this a form of infrastructural power that is wielded by corporations in Ireland. Because it's tax, it's a claim by the state that the state is in a sense negotiating or surrendering or negotiating jointly with these companies. So I think that there could be a level of influence wielded by these corporations in Ireland on non-tax issues in future that will look similar to the tax games, but it may not be tax. It could be data regulation or income tax payments of expatriate workers, for example, is another possibility. So, long answer to a short question.
I won't start with the more of a comment than a question, but it just made me think that the fact that, production labour is not necessarily linked to foreign direct investment in Ireland. There's a huge labour force of, I'm on about consultants all day long, consultants, tax experts and so on. How much do we know what proportion of the Irish, I suppose, financial services sector is serving the foreign direct investment, which is not necessarily productive? Like how much was a factor is that in our economy is that? And then probably the second thing is, have you any thoughts about or thoughts or ideas about how to move away from the current model of our economy being based on foreign direct investment?
Yeah, so two great questions there. The financial sector, there's some recent research that shows Ireland and Dublin as a very concentrated area for employment of people who are tax accountants or lawyers working in actuary or in these sorts of advisory services. Now the data is, is very difficult to collect. So some innovative scholars have, for example, used LinkedIn and looking at, where the professions are. And there is some official national statistics on, for example, our level of employment in the area of what's called treasury management. And I understand that as people who are doing the back office management for investment funds, and that's about 40,000 people. So that's, for the Irish state, that's a material number of people. So the financial services and the financial sector stuff is, I researched that a bit less because it needed a lot more scope to understand it. But my very cosmetic take on it is that part of it is tax driven. There's certainly tax advantages. There's big tax advantages to aircraft leasing. I know it's a random sector, but about 40% of global aircraft are leased through Ireland. So it's a huge industry. And it evolved from just practitioners who came out of Aer Lingus and set up GPA, Guinness Peat Aviation, and learned how to lease aircraft. And this then became a huge sector where most of the global aircraft leasing firms are now in operating out of Ireland. And there's a huge tax advantage in aircraft leasing because you get accelerated depreciation on the purchase of an aircraft. So it's sort of treated equivalent to if you buy a computer in an office and you can write it off against your tax. You can do that with an aircraft in Ireland. So it's very specifically and carefully negotiated into tax treaties in Ireland. So that's an example of aircraft leasing, and knowing how to lease an aircraft, how to do the contractual work is complex. So they employ less than 2,000 people, but in between 1,000 and 2,000 people in Ireland in that industry. So I would say the majority of the expertise in the financial and financial services is investment funds. And I think there's a tax advantage in some of that. There's also a regulatory advantage in the regulatory regime and what financial instruments Ireland introduced in Ireland, and I think was quite a quick mover in the FSC to offer certain financial instruments. And those instruments are so complex that human expertise is really needed in order to do the legal work and accounting and management of those transactions. So I think expertise is also a reason that people are here. And that then complicates the picture again because that's real employment, but it's in a highly financialized industry, global industry. Yeah. So that's one question. And then you had another one, Sarah.
Ideas other than the current foreign direct investment model.
Yes. Yeah. I mean, I think that work it's certainly to be amplified, but there's no shortage of proposals, I think, around quality work. And work on, for example, quality work that could be created through the care economy in Ireland, for example, the green economy. And, one of the challenges is where do multinationals sit in this? And, what attitude should we have to multinational corporations? Because they have a really dark side, and they're, especially labour conditions in the global south. I often wonder about Foxconn workers who are building these Apple iPhones, in Taiwan or wherever, and the conduct of these companies in other parts of the world. But I think there is a project of work there to look at what would high quality full employment look like in Ireland that's more balanced, that has more domestic roots. And for work to be sustainable, it has to be work that will always be needed. But that's why I think of the green economy and the care economy, valuing childcare workers, valuing people in the community and the work that could be done that would always need to be reproduced. That reproductive work is something that I think is really under discussed in Ireland.
I mean, in terms of the discussion about what kind of transition needs to take place when we move from the current system, and of course there is a development model there that seems unsustainable. It's interesting to see the discussion taking place in different countries that are in the same situation. And there is, for example, there's been the discussion in Luxembourg, and one interesting element of it is also a recognition of how quickly things can change and how risky it is to be so reliant on a few very big corporations that when they, for example, shift on paper, then it can have huge impacts extremely fast. And there's even an element where the government is very much at the mercy of very, very powerful actors and decision makers. But at the same time, we're seeing with one of the changes that's happened is that real economic activity has started to play a bigger role, and there are more requirements about having real economic activity. And so there, we might even see that in some ways, the economic value of hosting corporate headquarters can actually increase, and the real economic activity can go up. But the thing is that when we then look at the global picture, you will see that that economic activity is still very, very limited compared to the overall picture of the corporation and where it's generating its income. So that mismatch is even when we have more economic activity in the headquarter country, that there's still a very huge mismatch that needs to be addressed. But on this, I would also just say that in a way, there are some parallels with other global negotiations, such as the climate negotiations. And at the core of this is that something needs to change. Something here is not sustainable. The fact that we have governments losing, I mean, the estimates say that it's several hundreds of billions of euros that are lost every year because of the international tax loopholes. And there is a fatigue of this problem. There is a real urge, and this is what we're seeing from the Africa group, is that they're very keen to to resolve this issue now and to get a more fair system. And then starts the negotiations, but I think there is a recognition that this is not sustainable. We need change. And similar to climate change, when we talk about changing huge elements of society, we need a hard discussion about what transition look like. So I'll stop there.
Just maybe briefly, yeah, I was really struck by Tove, what you were saying about the shifting from the negotiations taking place in the OECD to the negotiations taking place in the UN, and the opportunity that opens up for more transparent engagement and dialogue with the governments. And you also said that the vote in the UN was passed by consensus to begin these negotiations, but that Europe and Ireland are also against sort of the deeper reforms. So I wonder, could you speak a little bit about what has been agreed at the UN level and the position that the EU and Ireland within that are taking as part of that process?
Yes, I'm very happy to answer that. Indeed, and the decision was by consensus. And what was decided? It was decided to start a UN tax process where all countries participate as equals, and to look at developing what they say is a framework or an instrument with the aim of reducing illicit financial flows, international tax avoidance and evasion, and strengthening international tax cooperation. And it's true that everyone voted for, even though we know that politically, especially the OECD countries, have strong hesitations. And we believe there are a few reasons for that. One is that geopolitically speaking, it's very controversial to run over all of Africa. Africa is standing united, saying we want to negotiate global tax decisions in a forum where we can participate as equals. It's a very fair ask, and it's quite controversial to dismiss the whole Africa group. And the other thing is that it's very difficult to argue how come that the global decisions are made at the OECD. For a few years, they argued that developing countries are actually on an equal footing, and there's no difference between the UN and the OECD. But we've seen over the last years that this is not the case. The developing countries have had huge problems having fair conditions at the OECD. There's been a number of problems with their participation. And that's why they're saying enough is enough. We want to be treated as equals. And there we get to a point that's actually a question of basic democratic principles. And I think there it becomes difficult for the EU to defend a stand that says, no, we refuse it when Africa says we want to be equals in global decisions on tax. There's also a point where the demand actually becomes so fair that it's difficult to say no. But lastly, in terms of the discussion about a UN tax convention, and that's what we're discussing now, what should this process produce? And the Africa Group wants a convention. There comes another aspect, which is that the EU is not one entity. We have within the EU some countries that are benefiting from the loopholes, but we also have some high tax countries that are losing large sums of money because of the international loopholes. And there you really see that the EU countries are not one interest. There's actually some deep divides in terms of the interests within the EU. And you have some member states that are causing other member states to lose a lot of money. So that's also where we're starting to see that the EU is a very, very diverse entity on this. We see similar divisions in other regions as well, but that's where we also think there's the potential to have a progressive alliance of countries that are just losing out and want to work together across North and South to get a more fair system. So this is the dynamic that we hope we're starting to see at the UN.
Oh, thanks very much for that response. It was something that was going through my mind as well, because what happened over the years, as far as I could see, was things like trade, which the southern countries wanted to be dealt with through the UN, was taken out, and intellectual property was taken out. So it's interesting to see tax actually coming back to the UN. But anybody else, another question from the participants here?
I'm wondering, what is the appetite, the political appetite for unitary taxation, and what role can education play in that, in driving or shaping public pressure?
When it comes to unitary taxation, this is one of the very surprising breakthroughs we've had in the last 10 years, is that it used to be taboo to talk about taxing corporations on their global profits. It used to be a conversation stopper. And now Pillar 1, even if I agree with Nessa, Pillar 1 is unlikely to ever materialize. But suddenly you have the OECD countries that have actually decided on a system that is in a limited part of the tax system, but it is unitary taxation. And the minimum effective corporate tax rate, even if it isn't effective, we have still decided it's okay to talk about these tools and they can be useful. So the conversation shift has been massive. Suddenly it's not taboo anymore. And the resistance towards unitary tax has always been much higher in the OECD countries than in the global South. So with the OECD discussion having moved, and now it's okay to talk about these things, and then comes a UN negotiation that means that developing countries will play a bigger role. It really seems, in the longer run, it seems very realistic to imagine a change, and much more realistic than it did only a few years ago.
Did you want to add that, Nessa?
Yeah, I suppose I would just add, I haven't studied it in detail, but the old proposal from some European Union states of a common consolidated corporate tax base which has been renamed now, I think, the BFIT. I can't recall what it stands for, but I guess that's the European Union proposal, that there would be a pooling of, a treatment of corporate profits in a pooled way and taxed on that basis. So, from an EU perspective, that's probably, the starting point proposal, maybe, in terms of, action there. The problem is, of course, in the European Union, there's still what we call tax sovereignty, that member states have full autonomy over their own tax systems. It's not something that has become harmonised. And that is, of course, Ireland's strong position, because it is against the idea of a common tax base in the European Union. But this is an idea that it is killed and then it rises again in a new form. So there's a lot of support among the larger EU states for this. And it is something that is debated and has been contested in Ireland in the Dáil, and there is, it has been discussed and resisted strongly from government circles. So that's, I think, an area of research, perhaps with the trade union movement, that could be resurrected and discussed in detail in Ireland. Yeah.
Great. Thanks very much. Did you want to come back to the question about education, Hilary? Because I think you had a dual question there.
I suppose, like, we've been broadly talking about different ways about unitary taxation and at a global level, but I'm wondering, bringing it down maybe to the work of education, the work of FJI, and you're talking about centering the key principles behind all of this, because as you're saying, these tax laws and reforms change constantly and they resurface in different forms. So if we're thinking about the broader principles and to drive educational practices that will encourage people to build that, to have those conversations in their communities and to build the public pressure to shape that appetite to the point that it's unignorable. What are those broader principles, and what sort of guiding points can you give us?
To say, we can also throw that question out to everybody here and say, after Nessa, maybe Tova might want to add something.
Yeah, I mean, there's a range of proposals out there for global tax reform. And for example, one is a destination-based tax proposal, which was very strong in the US under Donald Trump and kind of faded away. But I hear maybe come back into political fashion. But I think unitary taxation is a very good approach from an educational point of view, because what you're trying to talk about with people is, what do corporations really do in the world in terms of their value chains and their wealth chains? And let's look at these two things together and identify what different roles different countries and the people within those countries are involved in these sort of global value chains and wealth chains. And that's maybe a way into talking to people about a whole range of things. That could be about labour practices, as well as other regulatory issues, as well as tax issues. And then, of course, there are, concrete proposals within the European Union around a common unitary tax base as a way of tax treatment of corporations. And, the debates that will be coming up in the United Nations, where, there is significant support among a lot of African states for unitary taxation, or there has been, at least in some of the think tanks, like the South Centre, for example, and other groups. So, I think simplifying down maybe what the principles are in those different proposals might be a way in. And also acknowledgement of who would the winners and losers be, because, Ireland would be very concerned in terms of the revenue implications of that proposal. So, naming that and then looking at, well, what would the alternatives be if that was something that came to fruition, might be a way into it. Yeah.
Thanks very much.
I was, Nessa, hoping to ask you briefly about I'd like to build that coalition for transition to a more just system, and thinking about here in Ireland, you mentioned how important FDI is for employment, and that 17% figure is obviously really significant. But I'm also sort of reading that as 83% employment is not right up in that. So I'm wondering, first of all, what is the impact on those smaller, I suppose, employers? I'm not meaning to paint them all as mom and pop stores, right? But what is the impact of a tax regime like that on smaller competitors who might be paying a low rent and corporation tax but don't necessarily have access to all of the other dodges around them? How do you compete if you're a little cafe like Starbucks, that doesn't pay virtually no tax? And does that present an opportunity, do you think, for bringing in partnerships beyond the ones that we are familiar with in terms of trying to build that goals?
Yeah, I mean, I think that happened in the UK very effectively because I think they introduced what they called the fair tax mark or something among smaller businesses, where they kind of mobilised on a tax justice agenda. And I certainly picked that up in my research, where even, tax advisors and accountants who are supporting small businesses and doing their accounts were like, the corporate tax is pretty straightforward for a small business, but the complexity is because of the opportunities that are possible to grasp by larger corporations. So I think it is a tension, between different sized companies in terms of, how relevant this issue is to them, because it's not relevant to domestically rooted companies who don't, because large-scale corporate tax avoidance depends on global mobility. So I think that there absolutely is sort of an opportunity to have a healthy discussion around that. I mean, the other issue, and this isn't my area of expertise at all, is just like that, tax is a sensitive issue to business more generally. So I would be saying, okay, if we're not going to have the corporation tax, there's other forms of taxation that we're going to have to look at, and that, like, Ireland has very low rates of employer taxation as well. So, smaller businesses mightn't be a fan of that proposal, I don't know. But, I think there is a constituency there that certainly wouldn't be fans of the kinds of avoidance structures that have been happening through Ireland, and would see them as very, like the Apple stateless structure was used by Apple and maybe one or two other companies. It's a very minority activity, but hugely profitable for those very large companies. Yeah.
Thanks a lot. So I'm looking to another round, and then we'll go back to Tova and Nessa again.
There's been a lot of talk today in my own work around the inverted commas care economy, but as yet we haven't come up with a model to fund that. We know there's lots of work, you just don't know how people get decent sustainable wages and income from that, and that's another question. And then the idea, I think, that the role of small to medium businesses in Ireland has the anti-regressive largely. I know that's it's a total sweeping statement, but in terms of the turning that into a force for change, I'd see nearly as more. I don't know whether you'd have a better chance with the corporations, to a certain extent, because it's cultural. It's cultural as well, about ownership of property in communities around the control of resources. So I'm just wondering around I'm wondering around the model. I can certainly see around the organising of workers. I'm not sure I can see around the organising of small businesses, because if we're organising them around their own self-interest, quite often is, under our current model, contrary to the community's interest, even whilst also, they're both simultaneously exploited and exploited. Well, that's it. So something around that model that we might have to, I think if we went down that route, we'd find ourselves having to take on the people we sided with. I don't want to quote James Conley because there's enough guns going around, but we might have to keep those for later, That's so just some thoughts around that, and I'd really be interested in what other people think about funding care for nature, care for more. With the funding that work, there's mountains of work available in Ireland that needs to be done. But it's just, how do we pay for it under the current model?
I'll hand over to Nessa first, and then we'll see if we've still got Tova there. She might have a different perspective, or
Yeah, I suppose my answer is more to direct to other people who will be able to answer the question better than me. But I do agree with you that I think, you know, on the small business front, there is a very low tax agenda generally, is the message often from associations associated with small businesses in Ireland. And there are, you know, tax breaks there for that sector as well. And I suppose the issue there is, has small business ever really been supported in a genuine way, or innovation from the state, or, you know, so in a way it's not surprising, because the state attention has been on the large corporations as well. So it's not surprising that we have this kind of competitive, sense of competitiveness from the small business sector, of trying to, you know, a sense of we're always just trying to survive. On, you know, job creation and other economies, I think FJI would be very well placed to plan a follow-up session, perhaps. And I know there is forthcoming work from the Irish Congress of Trade Unions and others on this. There has been just last year a commission on taxation and welfare in Ireland, and these reports there's only been, I think, 4 commissions in the history of the state, and their reports have always, you know, either been disappointing or ignored. But I think last year's commission came up with, you know, a set of credible and strong proposals in part. And some of that was looking at the area of capital taxation, like wealth taxes and other areas. And, you know, I think that report gives us a starting point to look at how revenue could be raised in Ireland in a different way from taxation.
Thanks very much, Nessa. Tova, I was just wondering if you're still there. Hope we haven't lost you. And also, that might have, some of these questions are particularly related to Ireland, but it would be interesting if you have comments from what's happening in other countries, or how some of these issues might be being seen. So over to you if you want to make some comments.
I'm happy to chip in, but I think the first thing to say about these debates is that it's very important to have them at the national level. I think insights into the context, the concerns, but also really there needs to be a bottom-up ownership of this debate. So I think we can compare different countries, but I think the international discussion can definitely not ever replace the domestic discussion. And yes, I mean, we're seeing it in many different contexts. One of the things that's happened over the last 10 years is that it's become more complex when it comes to what kind of tax loopholes are allowed. You can say we've seen such a thing as patent boxes. It's quite complex and requires administrative capacity. And this is an okay way of offering tax incentives. At the same time, we've seen that the more classic solutions, such as just not having a corporate tax at all, which was an approach that especially many of the small islands took, tolerance towards that has been significantly reduced. So we've seen a lot of the small island players in the international tax competition be knocked out and have their roles substantially either made more difficult or simply cut out. Is not to say that there are not still islands playing a big role, but we have seen the competition move towards more complex financial centers and what we would call tax havens in some cases. And of course, I mean, this has often happened, especially with the small islands. This happens without any alternative being presented. And it's even linked to the discussion about the need for international support, because for many islands, international support is an important source of income. And there is the discussion about climate finance. So what we can see in that context is that they are very upset that the international climate finance never arrived, and now their development model is becoming unsustainable. But that actually brings us back to the point that repairing the tax system in countries all around the world and stopping these loopholes that cause such a massive loss of resources for governments is absolutely crucial to getting the other commitments fulfilled, including the commitments to deliver climate finance and support for development and so forth. And now there's even also the discussion about, should we look at having certain types of global tax instruments that can try and contribute to fulfilling the climate finance targets and so forth. So these are some of the things that we have noticed at the international level when debating the transition on tax, that you can actually see it in a bigger discussion about the transition that's needed within many areas, including climate.
Yeah. We have another question, Tova, now before we finish.
Sorry. Two questions, just more a point. And yeah, Tova makes a very important point there. But just earlier before that, with some of the questions that were coming up, I was thinking we were concerned that we were moving away from the issue if we were focusing on what kind of work should be doing in Ireland, and what if we had more, you know, if we moved away from the FDI model, I kind of felt surely then we're moving away from the core messaging of the work here, which is that the tax justice is an issue for developing countries, and that really is our messaging. It's kind of that, you know, a lot of the income coming here, what really the messaging is about what that's doing for those developing countries, and not to lose sight of that. But maybe that's where the messaging comes in. It's to do with whether they can use those resources. If tax was distributed properly, equally, they get to use that towards climate financing and climate mitigation issues. It's just a messaging. I'm just kind of thinking we're moving away when we start talking about the care in Ireland and that, and where it was about to work then in this.
Well, thanks, Mary, for that.
If I could just give could I give a short response? Because I think that's a really important point, Miriam. Like, why are we talking about the Irish domestic economy when, you know, really this is a global justice orientated group and discussion? And in a way, I suppose, the reason I flagged that at the end is how I see Ireland's FDI model is one that is very highly state-led and intensely managed, you know, right since the late 50s up till today. And it may be that if there's change in Ireland's FDI model, it'll come from external pressure, just like all of the changes up to now have happened in that way. Now, if that change does come, it means, you know, that there may be adjustments to the labour force in Ireland or whatever, and it's good to be prepared for that. But if there's going to be pressure from internally from Ireland, from civil society organisations here, I think because the model is so embedded and central to the industrial policy, you know, that it behoves us to have a plan for something else. And in a sense, states don't let go of their advantages, even if they are causing harm to other countries when they don't have an alternative. So that's the reason why I was flagging kind of the national agenda there. It's that, you know, there is sort of a panicky feeling that you can see in the politics of tax in Ireland when it began to be challenged because we are so dependent on it. So that's just the reason for that, yeah.
Thomas, will we finish on that note then? And so, first of all, I'd just really like to thank Tova for being with us for all this time on a Sunday afternoon.
Yes.
And it was great that you were there at that event in New York. It sort of made it really live
Thank you
for
for
me.
having me. It was a pleasure.
It was great having you there, and somehow it made it more lively for me, the fact that you're at the heart of the changes at the moment. And then to have Nessa, who's just finished such a significant piece of research on the central issues for here. I mean, could we have done any better, really? So thank you both so much, and obviously everybody else but Thomas, you might like to say a couple of finishing words.
Yeah, just to say thank you to everybody. Thanks, Toby, for joining us on a Sunday afternoon. Thanks, Nessa, for sharing all of this research that's so fresh and up to date. And this is kind of what we wanted to get out today was, like, you know, over the whole weekend we've been reconnecting with the sort of broader community of FJI, and with this issue, this was like an opportunity for us to get up to speed with where things are at internationally and how we fit into that, and then, you know, where some of the sort of opportunities might be for as we find our way into that work again as FJI. So this has been great for that purpose. And we're going to make a recording that guys are helping us with for educational purposes afterwards. So thank you very much, and thank you very much, Jean. That was fantastic. Great to have you involved again, and thanks very much for moderating this evening.